How to scale the trading business. Trading plan. We absolutely must have a complete trading plan. The trading plan includes the checklist we saw earlier, timetables, risk management, etc. Everything our trading plan provides for. Having reached this point, we studied, created our checklist, backtested, and optimized it to make it more functional. You may also notice that your strategy performs better on some assets than on others, so we should choose only those that perform better and thus create our watch list, the list of assets we usually trade. 71. Create your watch list. So, we create our watch list, our list of assets. Especially at the beginning, our advice is not to go above 3 assets. 2 or 3 are more than fine, in fact, 1 is even better. Some obviously want more choice, but specializing on 1 asset is more than fine and allows us to be much more focused. Usually, going above 3 becomes a bit too much. There is not so much need. Having reached this point where we have our asset, we should first test it in demo to see how it responds and how real trading works. 72. Psychology, mistakes to avoid. Again, our advice is not to spend too much time in the demo, as it is not very conducive to real learning. The demo is more for learning to test the strategy and its statistics. There is a big difference between testing the plan in a demo account and the real account. In the first case, we use virtual accounts that the broker provides us with, so any loss will not bother us much. In fact, we will be very comfortable, whereas when it comes to real money, psycho-emotional conditioning takes over. When we start using our real money, the psychological aspect becomes very important and starts to be our enemy. Why? Because we tend to get gassed, get excited because we want to make money, because this thing is new and so on. So, very often we want to make market entries even when we don't understand what the chart is telling us and don't know if the time is right. We may enter late or too early, or we make a lot of entries in a row and start to lash out at the market because we don't know how to deal with all those emotions that are bound to happen in the profession of a trader. In reality, the trader profession is very much influenced by psychological conditioning. 73. Many even say it is 80% of the work a trader does. We may or may not agree, but in fact many traders support this. If we do not control the emotional aspect, we will likely encounter difficulties. The focus must be on sticking to our plan, but we must also be very careful not to let ourselves be influenced by psychological conditioning. Our focus should not be to make money fast or get excited, but to stick to the plan and manage risk coolly. Therefore, we must never deviate from the risk management we have set ourselves. Our equity curve may suggest that we risk a certain percentage per trade, but we must never deviate from the plan. We are paid as traders to manage risk maniacally, not to mega perform and blow up our account. The only thing we can control is not to overtrade, i.e. open too many trades that do not follow the checklist or plan. It is very important to establish a maximum risk per trade, per day, per week, total, and to keep it in front of us at all times, as if it were our Bible. 74. Rehearsal in real for emotional management. Now that we have our trading plan and tested it in both demo and real, we first have to load up the account with all our savings. The ideal thing is to start small, becoming familiar with emotional management, plan management, the discipline it takes, and so on. So we test on demo first, and then we can choose whether to capitalize and how profitable we are. Again, a gradual approach is always best. If it was not yet clear, we do not put all our savings in the account because that would be financially wrong. You have to do the maths well and work out how much capital to devote to an activity as risky as trading, because yes, it is risky, and you risk potentially losing all your money. One option may be to evaluate a prop firm, companies we have already discussed on the Stealth Retail YouTube channel and which have critical issues. But in contrast to the broker, where you put up your money, with prop firms it is they who put up the money. Usually, you pay a fee, maybe €250, 300, let's say €500, to access a test that prop calls a challenge, which is a kind of exam where they ask you to prove you are profitable by managing an account provided by them in which you will have to perform a certain performance required by them. 75. Capitalized account prop firm. So only when you have already proven yourself to be profitable, can you go to a prop firm or get a capitalized account. Only when you have already gained some experience. The prop firm is definitely not for beginners. In essence, prop can be a good way in the beginning for those who do not have a lot of capital and want to capitalize faster. Be careful, however, because it is very risky and should only be done if you are already profitable, if you already have a solid strategy, and if you have already proven that you can apply it successfully. Above all, the prop must be approached with a very strong mindset. In fact, the prop is paid for, it is not free. For example, in the challenge phase, the major prop firms require you to perform 10% within 1 month, with a maximum drawdown of 10% and a maximum daily loss of 5%. If this phase is passed, you usually move on to phase 2 of the challenge, also known as verification. This phase very often lasts twice as long as phase 1 and requires you to even have your target performance, 5% profit target in 2 months, maximum and daily drawdown remain unchanged. 76. The props promise to give you a more or less capitalized account, depending on the test you chose at the beginning, if you manage to pass the 2 stages of exams required by them. The stakes of maximum and daily drawdown remain unchanged, but there will be none on target profit. This means that you can make any percentage profit. Usually, prop will pay you back 80% of the total profit and keep 20%. After receiving your first profit, many prop firms even refund your initial fee, precisely because their main goal is to find skilled traders who manage their accounts consistently over the long term. This is an alternative way for those who are not particularly capitalized, but already have some experience and are already profitable. There is no point in trying 10,000 challenges one after the other until you get the bill, so get it out of your head already. However, it is a good way to capitalize. You can use the money from your first profits and put it in your trading account. After that, we can start trading with much larger capital. I hope you have find this video helpful, so kindly like, share, subscribe to this channel for more finance education video.